Hello everyone, my name is Renee and I'm a financial journalist from FSM1.com. The markets have been in a strong rebound in the first quarter of this year. Find out what are the top performing funds from Colin and Sean, our research analysts.
In the first quarter, risk assets were fueled by the possible potential resolution in the current US-China trade dispute and a dovish pivot from the Federal Reserve. Global equity markets rebounded, with the MSCI AC World Index rallying by almost 12% over the first quarter, and as a result, all FSMI equity indices recorded gains. So here's our top equity funds for the first quarter. With a stable yuan and a strong recovery, sentiment towards the Chinese equity markets turned increasingly positive, and on top of that, recent and upcoming policy efforts, as well as the news of greater A-shares inclusion in the MSCI benchmarks, has also supported prices. Just within the first quarter of 2019, China A-shares mastered a monster rally of 31%, and for this reason, Chinese equities, in particular the A-shares, remain at the top of the performance table. Across the globe, US tech stocks have also rebounded from the December lows as the pessimism unwinds. Better than expected earnings and sales figure alongside decent growth prospects once again propelled tech stocks higher. This led the broader US market higher, which explains the high position for the US funds and the US tech funds on our table. Overall, within equities, we remain overweight the Asia ex-Japan region as robust economic and earnings growth still support majority of the markets in the region.
In the first quarter of 2019, bond market as a whole registered positive performance as investors struck off fears of a worsening US-Sino trade dispute and slowing global economy. High yields and emerging market bonds kicked off a risk-on rally after having gone through a torrid 2018 as seen from our FSMI High Yield and FSMI Emerging Market Bond indices, which have registered positive performances of 5.7% and 2.2% over the quarter. Here are the top fixed income funds for the first quarter of 2019. Cheap valuations and favourable market sentiment have prompted investors to pour money back into riskier securities after having gone through multiple dips in valuations in 2018. One example of a fund that has reacted very well to positive market sentiment is the Franklin Global Convertible Securities Fund, a convertible bond fund with the ability to capture some of the upside in equity markets. The rebound in equity markets have positively contributed to the fund's first quarter returns of 10.6%, the highest of any fixed income fund on FSM1. Credit spreads for Asian bonds, high yield, and emerging markets debt have also narrowed quite significantly over the quarter. While there is further room for spread compression, investors should not bet big on the scenario to play out. Having witnessed the reset in sentiment in 2018 and a rally at the start of the year, we think upside and downside risks are fairly balanced for fixed income at the moment.
You can read more about the other markets we covered in our article links listed below. If you like this video, give this video a thumbs up and don't forget to like our Facebook page too. If you have any further questions for our research team, leave them in the comment section down below and we will answer a few of them in our next Q&A session with Keen, our research manager from FSM Singapore.